This is the Wall Street for Main Street radio podcast, your number one destination for financial news, information, and education with no strings attached. Be sure to check out our other podcasts and articles at www.wallstreetformainstreet.com. Now, here are your hosts, Jason Burek, Mo Dawood, and John Manfreda.
Hi everyone, this is Jason Burek of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He's Keith Neumeyer, President and CEO of First Majestic Silver. Thank you for joining us again, Keith.
Well, thanks a lot, Jason. Appreciate your time.
Now, Keith, before we talk about the mining industry in general and production costs and the cost of your company, how well your company's doing in this tough and turbulent silver market, I'd like to talk about the supply-demand fundamentals for silver. Has anything drastically changed in terms of the supply-demand fundamentals from, say, a year or two ago?
No, I don't think there's really been a huge. Well, it depends on your question on the investment side. There's a lot of investment coming out of India for sure, which is interesting because the gold restrictions there has caused the Indians to invest in invest in silver quite a bit, which is interesting. So, based on what I've heard from the different sources, a ton of silver has been going over to India. But from a commercial standpoint, we're seeing the continual increase in demand. I think between 4 to 6% a year increase in demand, and that demand is going into solar panels and electronics and so on. So I think the supply demand fundamentals of the metal actually look very good. And the numbers I've seen is that the silver market, the physical market, is still in a deficit and has been for several years.
Yeah, I mean, when I look at the supply-demand for silver, I see more electronics usage for silver. I see the demand for solar. Many people predicted the solar demand could collapse, but Elon Musk looks like he's about to solve some major problems with solar, and he's putting these cheaper Chinese-made solar panels on a lot of people's houses in California and Arizona with Solar City. And that looks like people are, instead of, coal-burning power plants, it looks like people are going to put silver solar panels on their houses to reduce their electricity bill a little bit.
Definitely, the solar panel industry is really starting to get some momentum. It's not like unlike any other new technology, right? There's this initial hype, and then there's oh my God, and there's a consolidation. A few companies go broke, and then the strong ones do consolidation, and then they end up rebuilding or having success in the industry. We sure saw that in the internet, in the early 2000s. How many hundreds of companies went bankrupt, and then look at some of them today. They're just some of the biggest companies in the world. So I think we're seeing that in the solar industry, and it's definitely caught wind, and it's really getting some momentum behind it. And I haven't seen any numbers recently, but some data that came out of Barclays about a year or so ago I read, and it was predicting, I think, over 100 million ounces of consumption in 2015 or 2016. I forget I shouldn't quote numbers without remembering the exact date, but there's a huge amount of silver being consumed in solar panels, but there's lots of other industries as well, like batteries, and which is a pretty interesting area. The silver zinc battery is a very, very efficient battery, and much more efficient than the lithium battery. And all we need is a couple more lithium batteries to blow up, and I think that there will be a move into the silver zinc battery, and that could consume just an enormous amount of silver. And an interesting stat that I use, I'm not sure if you're familiar with it, but back in the 80s, during the peak of the photographic industry, there was about 5 billion ounces of silver countable on the Earth's surface. And when I mean that, I mean these are 1,000-ounce commercial bars, and today there's about 1 billion ounces of 1,000-ounce commercial bars sitting around in vaults and in storage and so on and so forth. So that 4 billion ounces over that 30 years has been consumed by industry and wasted away, and is in oceans and waste dumps and so on and so forth. And at that rate of consumption, there is going to be a supply squeeze sometime in the next few years. I'm certain of it.
Yeah, I completely agree. And the U.S. government, when it was on a silver standard, I think we had a couple billion ounces of silver that FDR and other it was Lyndon B. Johnson when he took off the silver standard, not FDR. Although FDR hated metals, but anyway, though, Lyndon Johnson started ordering the silver stockpile, billions of ounces of silver to be sold, and then they came up with all these great things. That statistics, I think if David Morgan's great new book, The Silver Manifesto, probably has the statistics in there. I haven't read the book yet, but I hear it's coming out on audiobook soon. So I'll get to that book shortly once it hits audiobook.
Yeah, he gave me a copy in Toronto just a few weeks ago, and I've got it signed by him. But I've got so much reading that I do. I just haven't got to it, but I'll get to it. And I'm sure, as you say, it's worth reading, and all the stats are there.
Yeah, I know how much time he spent, him and Chris Marchese spent writing the book. They spent a lot of time working on it and doing the due diligence for it. I'm really excited to read it. Mm-hmm. My next question revolves around the silver mining industry. A lot of these silver mining primary silver deposits that were brought online after 2009, they had feasibility studies of $23, $25, $30 an ounce silver in order to be economic. Do you think those miners have managed to cut costs somewhat, or do you expect a lot of bankruptcies among those miners who took out massive amounts of debt to try to bring those mines online at higher silver prices?
Well, I think it's I don't want to name names, particularly on a recorded interview, but I think there's just human nature to buy assets at the top of the market and sell assets at the bottom of the market, and we see the majors seemingly to do that all the time and continually make these kinds of errors. But I just put together a new company called First Mining Finance that just IPO'd on Monday, which is yesterday. The last two companies I put together, First Quantum Minerals, which became one of the largest copper companies in the world. I left that company in 2000. I put First Majestic Silver together in 2002, and what really created the value between with both of those companies is buying assets that are not wanted. Assets that were very cheap, and creating value is all comes down to what you pay ultimately for the asset. And I've been very good at timing, and I've been very good at buying assets cheap. And when you buy assets cheap, you can make money by whether you bring those into production or whether you monetize them in some way. But if you're buying assets at the top of the market, all you're doing is destroying wealth. And we see this occur in this sector or other sectors often. And the creation of First Mining Finance is designed to take advantage of this market. And as I said earlier, just IPO'd on Monday, and hopefully it will be successful in acquiring a lot of these cheap assets.
Now, do you expect then a lot of these silver miners, do you think there's a lot of silver production that could potentially come offline then in the next 6 months or 12 months or 18 months? What I've heard from a lot of silver bears, people who say, the silver price is not going to do anything for many, many years, is that so much of the silver byproduct, so much of silver is a byproduct of copper, and that, these copper miners are still producing, but the copper price just collapsed in the last 12 months. And, the hedges for these copper producers are going to come offline, and that means silver production could potentially come offline also, right? Or is there something wrong in my thinking?
I think that, it's like anything. It's again, this is human nature. When something looks bad, people start pointing at it and say it's bad. And when something looks good, people point at it and say it's good. When someone tells you the Dow is going to 20,000, maybe it's time to be selling the Dow, right? It's just, I'm a contrarian, and I try to do things that the crowd isn't doing, and I see the crowd, basically, calling this market lower, and when you look at any market that has a bear cycle in it, bear cycles generally last 2 to 4 years, and we're in the fourth year of this cycle, and the hatred and the valuations in this cycle are just amazing to me. And First Majestic has done more site visits in the last 3 months than it probably has done in the last 2 years. looking for assets. And we're very careful. Obviously, our purity is very important to us. And as all these other silver companies become gold companies, First Majestic is kind of the last silver company standing with its purity of silver. And so that's very important to us. So we're not going to be going out and buying copper assets. We're not going and buying gold assets. We're going to stay very focused on silver in Mexico. And I think we're getting ready for the next big run.
Yeah, Keith, I agree. I just don't see how the silver market, when I look at it, I look at not just your company, although your company has done a great job cutting costs, but there's a lot of other companies that produce silver that haven't done a great job of cutting costs, and they don't have as pristine a balance sheet as you guys have. Most of the silver miners and gold miners for that, their costs have been too high. They brought on very marginal projects. They took out a lot of debt to do it. You guys, that was not the business model that you guys have done. You guys were very careful about that. And my next question is, how has First Majestic Silver been able to cut costs without putting any mines on care and maintenance, whereas it looks like some of these other miners, they're going to be forced to do that in the near future?
Yeah, it goes to my earlier comment about contractors. And, as I said earlier, we're very deep, and we've been able to move a lot of this business that we used to contract out in-house. And, we have and that's unique with some mining companies. You have some of these juniors that have one mine, and they've been operating with contractors for the last 10 years or 5 years or how many years it may be. But and they have these contractors with contracts in place, and they can't get out of them. And even if they could get out of them, they don't have the depth in their staffing to be able to bring in the talent, or even they don't have the money to bring in the equipment. So they're really stuck, and it's unfortunate, but some of these guys just can't change that, and they're burning through cash, and they're having some real difficulties, and we're looking at some of those right now because I think that's what's creating the opportunity.
Yeah, Keith, it just doesn't seem like there's that much debt or equity available for most of the miners. We saw Allied Nevada recently. I know they produce a good amount of gold as basically a mid-tier gold producer, but they also produce a significant amount of silver. They couldn't raise any debt or equity anymore in this market, and they just went bankrupt a couple weeks ago. So it looks like we're seeing the capital has basically dried up unless companies have really good balance sheets.
Mm-hmm. Mm-hmm. Yeah, you're right. I'm not sure if you noticed, just yesterday we raised $30 million from Bank of Montreal in a bought deal that was just done. And even though I don't really like the price, we did it at $6.50 Canadian, and the stock obviously was at $26 a couple of years ago, and but we needed to shore up the balance sheet, and we burned through some cash in 2014 due to the drop in the metal price, and the offer was there to us from BMO, and we decided to take the money and beef up the balance sheet a little bit, and it came in bought, and so it was done. It was easy for us. They didn't have to market it. It went through a couple of very significant buyers, and which is a good thing, and quite interestingly enough, the last time we raised money through the equity markets was in September 2009. And this price of $6.50 is the highest price we've ever raised equity at. So, interesting.
And you said you're looking for acquisitions. You're out there on the prowl now. It's nothing immediate, but it looks like you're starting to kick the tires around for some potentially.
Yeah. Well, I'm just starting. We're well advanced in this process, and we've gone through multiple assets. I obviously can't name them, but multiple assets, and we continually do that. And we're opportunistic, and we're looking to acquire assets at valuations which we haven't seen for at least almost 10 years.
My next question has to do with the grades in the silver mining industry, because you've been in mining for a while. How much has grades falling a lot over the last number of decades mining silver affected costs and margins, in your opinion?
Well, grade is a function of price. And, when price is up, you could mine lower grades. And, we did it, and it's kind of a nice thing actually because at $35 silver, you could make money mining sub 100 gram material, and you've got, let's say, 80, 90 gram material. That's 3 ounces of silver. That's virtually $100 rock, and it's costing you $50 to mine it because we're pretty low cost miners. So you're making your margins 100%. Today, you can't do that because you're not going to make money mining 100 gram material. You need north of 200 grams right now to make money at current metal prices. So it's not really high grading as such. I think that's I'm sure that's going on in some instances, but what you do is you just mine closer to the reserves. So if you look at the 43-101s, and I could speak for First Majestic, I can't really speak about other companies. Our average reserve grade, I think, is around 200, like 190 grams or 200 grams, let's say, just to round it up. At $30 silver, $35 silver, we could mine, as I said, below that number and still make money. But at current metal prices, we have to try to stick as close to that reserve grade as possible just to generate positive cash flow. So that's really the focus. Because it does become a little more challenging, and so in some cases you may be forced to mine less, but it just depends on the individual mines.
Now, before we start recording, you brought up how you don't have really any control over the silver price, and the most important thing you can do running your business to try to remain profitable and not have to take on too much debt or sell equity is controlling your costs. Do you think the silver mining and gold mining industry in general have done a good job of controlling their costs?
Well, everyone's put in a pretty difficult situation because no one predicted what was going to happen. So, Bay Street or Wall Street can criticize the mining industry as much as they want, but the fact of the matter is, everyone was growing, everyone was making money, and everyone was happy, and then all of a sudden the wool got pulled out from underneath the industry, and everyone had to scramble. And some companies were able to react more quickly than others. The smaller you are, the less flexible you are. I think that's a general comment, but I think accurate. And for us being a mid-tier company, we struggled for a while, and we had to make some changes as how we do things. But I think we've done a good job ourselves, and I think generally speaking, I think the industry has done a pretty good job.
Yeah, I think the industry has been able. I thought more mines would start closing down already, but maybe with Allen Nevada finally going bankrupt, that's maybe the signal that there's going to be other miners, not First Majestic, but maybe higher cost ones or ones with more debt that are going to panic and either put the mine on care and maintenance or sell out to a larger company like yourself or another one for pennies on the dollar at a good valuation for an acquirer.
Well, I think the most important word you just said in that entire sentence was debt. We've been approached, as recently as this week, and but over the last 2-3 years, by multiple institutions and banks that are trying to sell us debt, and we didn't take any, and I think that was the right strategy, and I have been generally opposed to debt. I don't carry any real personal debt, so it's just. It's just a way that we run the business, and I think it, ultimately, it comes down to leverage again. I don't want to leverage the business, and debt is can kill you, particularly in an environment like we have today.
Yeah, I agree. You have enough leverage to a higher silver price with the silver production you have. You don't need the extra leverage with all the debt on the balance sheet, especially because the paper markets, in my opinion, Keith, I think the paper markets are manipulated for the silver price, because when I look at supply-demand fundamentals for the last number of years, they don't seem to matter. But, we don't know if the paper silver price is going to go to a couple dollars an ounce lower, or if it's going to start going higher in the next couple of months. It's just, in the short term, it's nearly impossible to tell where the price is going.
Yeah, and that's right. And, it's interesting, I was down at one of the conferences just a few weeks ago, and I was listening to the CEO of Freeport-McMoRan on the stage, and he was saying, there's a disconnect between investors and executives of mining companies, and when an investor buys a mining company, they want to see returns in a week or a month or in a quarter, and when a CEO or a management team of a mining company makes an investment, they have to look out 10 years, and it's hard for investors to understand that, and we have to make long-term gambles, long-term investments, and long-term decisions, because we're trying to these mines that we're building and operating are there for 50 years, and it's a different philosophy, obviously.
Yeah, I agree, and I remember I bought First Majestic Silver at $4 a share, I think in 2009 or 2010, after the crisis, and I remember you guys had one or two smaller mines online, but I really liked the way you're talking about your company, and you seem to really understand costs and things like that. And you had obviously a very good background. So I was very impressed, and I thought, well, he has a good vision for the company, and he's very careful about the acquisitions, and he's not taking on a lot of debt. So I thought that was good how you decided to grow the company without debt. My final question for you, maybe before I ask you about the future of First Majestic Silver, is I interviewed David Jansen last week. He's a precious metal expert from Vancouver. He said the gold and silver miners should start their own new exchange. Do you think that they should start their own? Do you think miners like yourself should join together and start your own new physical metals exchange where there can't be as many paper derivatives contract tied to the metal?
Oh, I absolutely do believe that, and I actually put a call out to the miners last year. I'm not sure if you heard my interview, but because we held back some silver production back in September of 2014, and it got some press, and I had probably over 100 emails from shareholders, thanking us for that decision, and so on and so forth. And I got an interview, and I said on the interview, I put a call out to all silver companies and said, let's suspend our sales for 1 month of 2015. And I said, let's pick June, as that month. And, because generally speaking, on a seasonal basis, June is always your weakest month. If you go back, and look at all your charts. And so I figured, okay, that'd be a good month to hold back the metal, and let's see what happens to the industry as a result of that, or to the price as a result of that. And I didn't get a single call from a single CEO that wanted to take me up on that. So it was a little bit disappointing. The COMEX, the paper market was created to help industry. It was to help miners, hedge. It was to help industry to buy their product. If you're Sony or Toyota and you're a big consumer of silver, for your products, you want to be able to buy a year's worth of your metal at a certain price. And, if you're a miner, maybe you want to sell a year's worth of metal at a certain price. So you have that mechanism for these industries to cooperate in a pricing mechanism, and it worked. And but over the years, the banks have got involved, and now, most of the trading that goes on in the gold and silver paper market is just financially driven. It's got nothing to do with supply-demand fundamentals. The leverage on the paper industry is ridiculous. You have 1 billion ounces of silver trading a year, around the world in the form of paper, and we only consume, or actually the mines only produce 800 million ounces in an entire year. So, the leverage there is 400 to 1 or something ridiculous like that. So, the regulators and the banks have allowed this to occur, and so there's really no price discovery anymore. You've got, a situation where, the paper market dictates the price of the physical commodity, which is not the way it should be. Supply demand should set price, and we just don't have that price discovery any longer.
Yeah, the paper market, Keith, whether it's the LBMA or the COMEX, it's turned into a humongous casino. And most of the longs on the futures market, in the past, they would take delivery of the metal, they would actually need it, or if there were banks, on the other side of the trade as hedgers, so the miners could lock in and profit, the banks would then sell it to another counterparty, sell the metal. But it seems almost all the longs, no one takes delivery anymore. And there seems to be a weird perverse incentive here where someone knows the people in power know that the market is the way it is right now, that they can kind of short the paper market, take delivery of the metal. And with the gold market, Keith, what they were doing is they were shorting the paper gold market and then taking delivery of the metal or taking the metal out of GLD, the investment banks were, and then selling it on the black market into India at, $100, $150 to $100 an ounce profit. I mean, this has to stop. Producers like yourself who have cut costs and work hard to actually make, do the real hard work in the industry, which is actually, produce the metal. It's not easy work. They're going to try to put you guys out of business, it seems.
Well, if they actually accomplish that, then what would happen to price? I could just see the price of automobiles, the price of computers, the price of everything would go through the roof, and because there'd be just no metal around. So I don't think these guys actually understand the physical market. They don't actually understand what it takes to make their life as easy as it is, because it all comes out of the ground, and they're just trading paper on a screen, and I don't think they get out of their office very much and travel around and visit the world. They probably should do that more often.
Yeah, I completely agree. If they do travel, Keith, normally it's like to a 5-star hotel or in a suite. So the analysts who have visited China, right? They don't leave their 5-star hotel in Shanghai or Beijing.
Yeah, no, that's very true.
Well, I just want to thank you again for your time, Keith. I really appreciate your insights into the silver industry. I think the cyclical bear market, this artificial paper bear market in the silver price, I think it's going to end very soon. I just don't see any way, even the lowest cost miners such as yourself, like that they can, maybe you guys can cut costs a little bit more, but, if the paper price keeps going lower, I mean, are you guys do you guys have contingency plans? If the paper price goes quite a bit lower, you'll have to put a mine or two on care and maintenance?
Well, we have done contingency plans at different levels going down, and, we know what we need to do at certain levels. If silver goes to $10, it's going to cause a lot of problems, and we'll be a smaller company. We'll have to, we won't be shutting down mines because that's a totally different situation. But there's lots of costs associated with that. But what would occur, and God forbid if it does, is that we'd be a smaller company. We'd have to increase the grades and then lower the throughputs, and we would have to lay off, a lot of people, and just make these mines a lot smaller than they currently are. And hopefully that doesn't happen. I contend that we have seen the bottom. I thought 1435 on silver last year we saw was the bottom. So far, we haven't seen that breached, and we've had a couple of runs at the 17, and we had a nice run up to 18 in January, and so I think we're building a really nice base here, and I think it's going to be still some time before we see $20 silver, but I do contend, and I would put a bet on the table right now that by December 31st of this year, we'll have higher silver prices than we currently see today.
Yeah, I just don't think any of this is sustainable, whether it's gold or silver or oil. We're in the commodities markets for a very long period of time because the producers eventually have to make a profit, right, Keith? You guys aren't being subsidized by any government, to my knowledge, that eventually the industry has to be able to make a profit or the supply is going to drastically contract.
Yeah, that's exactly true. And then governments start getting upset because you're laying people off, and then the whole cycle starts over again. So, a bottom line is we've got to make a profit, and costs can go lower. I've said in my presentations that if we see $16 silver, or current levels of silver for the next 12 months, we'll see a couple of bankruptcies for sure. There'll be some of these small guys that just can't survive it, and I'm not sure if the money is available to keep them alive. But, our case, costs will drop even further. We'll see another probably 10% reduction in our costs if we see the price stay where it is for the next 12 months.
Great. Well, it's always good to be lean and mean because you don't know how the world's going to react. And for a mining company, I think the best way to grow is without debt, although so many of these other miners have, because the debt is easy, and I guess the investment banks are calling every day, or a bunch of them are calling every day trying to offer you cheap and easy debt. So many miners just go along with it.
Mm-hmm. Yeah, that's very true.
Okay, great. Well, please tell our listeners where they can find more information about First Majestic Silver, and you guys also sell precious metals on your website still?
We do. The sales have dried up a little bit. We're still selling some silver. We've kept the price at $20 an ounce. It's hard for me to be selling, retail silver at less than $20 an ounce. And so as a result of that, we're not selling a whole bunch. But it's there. It's very nice, different products and different denominations. And, you can go to the website, www.firstmajestic.com. And we also have our corporate presentation on the homepage, and it's updated regularly with all the latest information. So if you want to see our mines and so on, see what we're doing, see some of our growth projections and where we think we're going, it's all there on our website. So then feel free to email us at info@firstmajestic.com, and that I actually get that email, so it comes directly to myself, info@firstmajestic.com, and your inquiries will be sent to whomever they should go to.
Great, and good luck with your new venture, First Mining Finance. I think it's a very interesting business model, especially because after you guys sell the assets, you guys plan on holding on to a royalty or two, right?
Yeah, it's a very interesting business model. It hasn't been done quite like this before. There's 18 projects in there now, and it was I merged 3 private companies together and vended it into a shell and renamed it First Mining Finance. The trading symbol is FF on the Toronto Venture Exchange, and it's trading around 50 cents Canadian. So in U.S. terms, it's pretty cheap. We're looking to build it into a substantial company. So, but it's a long-term investment. It takes time to build a business, but it's early stages yet. But we're going to be very aggressive. Looking to accumulate a broad set of assets in the Western Hemisphere.
Yeah, and given your track record, Keith, you have a good track record of buying assets, distressed assets for cheap and building quality companies with your copper company and your silver company in this one. So I think you're a very good jockey to back.
Well, thanks. Thanks for that.
Okay, well, thanks again for your time.
Okay, Jason, I appreciate your time as well.